If you are approaching retirement or already enjoying it, there is one factor that can quietly determine how far your money truly goes: taxes. You can have strong savings, reliable retirement income, and a well-planned budget, yet still lose a significant portion of your cash flow to state and local taxes if you choose the wrong place to live. That is why today's topic matters. Some U.S. states are far more retiree-friendly than others, especially when it comes to income taxes, property taxes, and sales taxes. A difference of just a few percentage points can mean tens of thousands of dollars over the course of retirement. In this video, we are breaking down the U.S. states that consistently rank among the lowest tax environments for retirees. These states either eliminate income taxes entirely, exempt retirement income, or reduce other major costs like property and estate taxes. The goal is simple: help you keep more of the money you worked decades to earn. Before we begin the first state on our list, take a moment to support the channel. If you find this kind of financial and retirement planning content helpful, please like this video and subscribe to the channel. It helps us continue bringing you clear, practical information that can make a real difference in your future. Now let's get started. 1. Alaska. Alaska stands apart from every other state on this list for one major reason. It has no state income tax and no capital gains tax. For retirees living on Social Security, pensions, or investment income, that alone creates significant savings year after year. Most areas of Alaska also do not impose a local sales tax, leaving property taxes as the primary ongoing tax expense. The average property tax rate sits around 1.14%, which is close to the national average. There are also no estate or inheritance taxes, which can be an important consideration for retirees planning to pass assets on to family members. While Alaska is often associated with a higher cost of living, the overall tax burden remains the lowest in the nation at roughly 4.6%. For retirees who can manage energy costs and seasonal challenges, Alaska offers an unmatched tax advantage. 2. Wyoming. Wyoming consistently ranks as one of the most tax-friendly states in the country, not just for retirees, but for residents of all income levels. The state imposes no income tax and no capital gains tax, allowing retirees to keep 100% of their retirement income. Property taxes are especially attractive, averaging around 0.58%, which is well below the national average. Sales taxes are modest and typically stay below 5.5%, depending on the local jurisdiction. Wyoming also eliminates estate and inheritance taxes entirely. This combination makes the state particularly appealing for retirees with multiple income streams or significant savings. For those who value simplicity and predictability in their finances, Wyoming offers one of the cleanest tax structures in the U.S. 3. Mississippi. Mississippi surprises many retirees with just how generous its tax policies are. The state exempts nearly all forms of retirement income from state taxation, including pensions, IRA distributions, and Social Security benefits. Importantly, these exemptions are not limited to low-income retirees. They apply broadly, giving individuals greater control over how much tax they ultimately pay. Property taxes in Mississippi are among the lowest in the country, making homeownership especially affordable for retirees. Although the sales tax rate stands at 7%, the lack of income taxes on retirement funds often outweighs this cost. Mississippi's approach is especially favorable for retirees who rely heavily on pension income or withdrawals from retirement accounts. 4. New Hampshire. New Hampshire offers one of the simplest tax systems in the nation. The state does not impose a traditional income tax and does not collect sales tax. For retirees, this means Social Security benefits, pensions, and retirement account withdrawals remain untouched at the state level. The primary trade-off comes in the form of property taxes, which average around 1.77%. For homeowners, this can be a meaningful expense. However, New Hampshire does not levy estate or inheritance taxes, making it attractive for long-term financial planning. This state tends to favor retirees with investment-heavy portfolios or those who prioritize predictable, straightforward tax rules over minimizing property taxes. 6. South Dakota. South Dakota provides a well-balanced tax environment for retirees. The state does not tax Social Security benefits, IRA distributions, or capital gains. That alone makes it highly competitive compared to many other states. Property taxes average around 1.09%, and seniors aged 70 or older may qualify for a property tax deferral program. This allows retirees on fixed incomes to delay payments until the property is sold or transferred, easing short-term financial pressure. South Dakota also avoids estate and inheritance taxes entirely. Combined with a relatively low cost of living, this makes it an appealing option for retirees seeking stability without sacrificing financial flexibility. 7. Florida. Florida has long been known as a retirement destination, and its tax advantages help explain why. It imposes no income tax, meaning Social Security, pensions, and investment withdrawals are fully exempt. Property taxes average about 0.78%, which is lower than many states, especially when combined with homestead exemptions for primary residences. While state and local sales taxes can approach 7%, groceries and prescription medications are exempt. For retirees who want a mix of tax efficiency, warm weather, and access to healthcare infrastructure, Florida remains one of the most popular and practical choices. 8. Nevada. Nevada follows a similar income tax-free model with no state income tax and no taxes on Social Security or pension income. Property taxes are notably low, averaging just 0.49%, which helps keep housing costs manageable. Sales taxes are higher, averaging 8.24%, but Nevada offsets this by exempting groceries and prescription medications. The state also eliminates estate and inheritance taxes entirely. For retirees that do not spend heavily on taxable luxury items, Nevada's tax structure can be surprisingly efficient over the long term. 9. Tennessee. Tennessee combines low taxes with a cost of living index below 91, making it one of the more affordable states overall. The state does not tax income of any kind, including retirement income. Property taxes are among the lowest in the nation, averaging around 0.55%. While Tennessee has one of the higher sales tax rates, food and prescription drugs are taxed at reduced rates, easing the impact on daily expenses. This balance makes Tennessee especially attractive for retirees who prioritize affordable housing and predictable expenses. 10. Texas. Texas does not impose any state income tax, which benefits retirees across all income levels. Social Security, pensions, and retirement account withdrawals are fully exempt. Property taxes, however, average about 1.58%. To offset this, homeowners aged 65 or older can qualify for homestead exemptions that reduce taxable property value. Texas also does not tax estate transfers or investment gains. For retirees who plan to own property and take advantage of exemptions, Texas can still be a highly tax-efficient place to retire. 11. Washington. Washington imposes no state income tax and does not tax retirement withdrawals or Social Security benefits. While the state introduced a capital gains tax on profits above $250,000, most retirees remain unaffected. Property taxes and sales taxes hover near national averages, and the state avoids estate and inheritance taxes. For retirees with moderate investment income and diversified assets, Washington remains a competitive option. Choosing where to retire is about far more than scenery or climate. Taxes quietly shape how much freedom you truly have in retirement. The states on this list consistently allow retirees to keep more of their income, protect their savings, and plan with confidence. If you're planning your retirement years or considering a move, understanding these tax differences can make a substantial financial impact over time. If you found this breakdown helpful, remember to like this video and subscribe to the channel. We publish regular content focused on retirement planning, financial security, and smart lifestyle decisions to help you make the most of every dollar. Thank you for watching, and we'll see you in the next video.